All right, good morning, everybody. How's everybody doing today? We should have now our YouTube live as well as you guys, and you should be able to see everything. Just want to make sure. Just double checked it on my side. Everything's working. So we should be good to go today. So again, I appreciate you guys being here. I think that we're going to go do a little more chart watching today. And again, when we talk about rules, we're going to talk about, bear with me. And again, I think it's worthwhile to at least go through the rules one time. I think that looking at the charts is probably an easier way to learn the rules. You know, some people are very visual, and some people are, I think most day traders are a little more visual than they are written word. So anyway, look, we can look at the written word, which is fine. And, again, what we're looking for is good tops or good bottoms at Fibonacci support. And then we're looking for strong trigger lines. And, when we say strong trigger lines, we're talking about large and small triggers coming together. So for example, let's take a look at crude oil real quick. And again, I always like to use the charts just to kind of help the visuals. Can you guys hear me? Okay. Bear with me. For any of you guys who have trouble, just so you know, look, click on the little settings button down here and go to your voice and video sound settings. You probably don't have. Let's see if that helps. All right, go with my USB. So you can see down here it's working. And then for your sound, make sure you've got a sound selected that actually works for you. And of course, you can customize anything that you want, but anyway, that should help you out. Hopefully, microphone's looking good. And Chris, thank you for posting that in. So, let's take a look at crude oil. Obviously we've got crude oil news today. But when we look at crude and we're talking about, good tops or good bottoms, and strong triggers, this basically covers the gamut here. This is the look that we're looking for with our trigger lines in order to take short trades. Period. I mean, that's it. Anything that falls under this category, we're looking for shorts. And when we talk about, bottoms, Fibonacci support and resistance, and good bottoms, this is the type of area right here that we love to see. Not only is it Fibonacci support, but if you guys remember from yesterday, one of the very big things that we talked about a lot every time you get to Fibonacci support is how many triggers are below support. And again, you can answer the question. It's very simple. None. And, like most markets, they're going to bounce from Fibonacci support almost every time. Without question. They're going to run up, hit the mid-band, they're going to come back down, retest again. And now they've done something which we discussed yesterday as well, which is a very, very good bottom, where we have divergence from support, and now we have a higher divergence from support. And, you know, when we talk about strong trigger lines, this is where we start anticipating, you know, we've already anticipated the bottom is in from over here. So what we're trying to find is opportunities to go long. And again, look, it's going to create a line in the sand for you. So, you know, we may get another bounce back from the mid band. The ultimate thought process is we're going to see something, you know, in this nature where we get a pullback, maybe back to 80, 82, give or take, somewhere in that neighborhood. And then it's going to give us the opportunity for long trades. And we're going to be able to take those long trades because we can establish that we've got a good bottom in place. Does that make sense? So again, this is where, you know, you start going to your smaller charts and you start asking yourself, you know, where do my small charts line up? And if they line up with a trend trade, which I'm pretty sure they do, just looking at this chart, we'll see. And again, I think 80 is kind of your line in the sand. We'll see what happens. Let me pull up some other charts here. So let's look at the range chart first, since that's what I grabbed. So here's our 80 area. My box got a little expanded. Okay, so 80 to about right there, that's the window. Everybody okay with that? And again, it doesn't have to go up just because we say it might go up or the indicators, you know, but again, this is the, you know, you basically look at risk to reward. And the reward, if this area goes up, is going to be 30 ticks. And then the risk, obviously now, if you got in on the way down, then your risk is very, very minimal. So let's do some color. Let's do some color fun here. Come on, why the heck is my colors aren't moving for me. Anyway, so you've got a little bit of risk, or no risk now, probably at this point. And, you know, ultimately, if it keeps going, great. Right? And I know you guys may not be used to this chart. Let me get the 5-1 chart for you here. And again, look, when we talk about trend trade rules, we're talking about buying support inside of the large triggers. So we've had our double bottom at support. Again, if you go long, did anybody go long? You know, and again, some people will take half their profit off right there, get their stops up a little bit. But remember, because of the good bottom, ultimately, we're trying to get up to this area. And, you know, sometimes they go up, they fail, then the small triggers roll over, and you get a second chance at it. Now, let's take a look at it. And again, we'll talk about management too. If, you know, again, management is one of those things that, here we go. So look, we can go in with an established thought that we have a good bottom in place. And you'll see this little rope-a-dope every once in a while where they'll come down, stop out the low a little bit, get to the high volume area, and then they'll go up again. Dang it, hang on a second. Now, will they go up again? I don't know. But if you're long, again, our management rules are pretty clear that if you get a lower divergence with the small triggers crossed down, they're going to come down again. And they did. So if you were in the first time, it's okay. We'll have to see how they feel about it the second time. And again, if the small triggers roll up, we'll look for another shot at it. So I want to focus on large chart. Is there anything in the large chart at the moment that says we're going down? I know we went down a little bit further than you wanted to. But is there anything that says down? Not really. Now, doesn't mean they can't go down. They can. But for those of you guys who are trend trading now, we have to wait. Remember what we said yesterday and Monday, really, about trend trading? Watch. I'm going to make your trend trading really easy. I'm going to turn off the large triggers on the chart. I won't turn them off. I'll just make them the same size as the small. All right. When the small triggers roll up again, you can start doing trend trades. Does that make sense? So again, if you took shot number one, which I think was a very fair opportunity, now you're waiting for, again, the second opportunity. But you have to wait for these small triggers to roll over, or else, you know, they could very well go down here and ruin everybody's life, stop everybody out, and start over again. But I want you to see from the small trigger perspective, you're not looking for a trend trade anymore. Doesn't mean they won't go up, because we've already got a really good bottom in place. And again, it's crude oil news day, so we have an hour and 15 minutes until crude news. So, they're notorious. Sometimes they'll come down here, stop out the low. Look, if they ran, great. Since they didn't run and they gave you some, here, is it better to watch two charts? Bear with me here. We'll move this over. Get that range chart out of the way. All right, bear with me. I should have just put all my workspaces in one workspace instead of two workspaces. It'd be easier. All right, so if you took a trend trade, obviously we had management rules that said, hey, you're going to have to bail out of this thing. I posted in one of these earlier today. Check it out. I had a trend trade short on crude, which I think was damn near spectacular to get down to the support area. And eventually, unfortunately, whenever you live by the rules, you have to die by the rules too sometimes. I lost a couple of ticks because eventually we had a third and even a fourth divergence with the small triggers going up. And it's like, you just can't stay short. I mean, you can, but it's the more difficult trade, if that makes sense. So, our rules almost always, when you have that third higher divergence and the second higher divergence, they're going to come up here and stop out the high. And then the small triggers will roll over, and then you get another opportunity. Anyway, needless to say, eventually the triggers did roll over. And as you guys know from looking at this chart, we did end up making it. This was the spot where that trend trade short happened. Right there. And you can see, look, we made it down. Support's doing its thing. Support's doing its thing again. We had one opportunity for a long trade that, unfortunately, the same reason that I managed out of my position, there was management over here which said, hey, if you hit a fib and get divergence down, there's no reason to hang in there forever. And then you stop and you recalibrate and you say, hey, let me wait for small triggers to roll back up. And then I won't have to guess as to what the bottom is. And if they want to mess around and go stop out the lows, they're more than welcome to go do that. If they do it, it's just going to create even a better bottom for us, right? Because then we'll have 1, 2, maybe 3 divergences. We'll have a pivot stop out. Now, I do want to play devil's advocate for a second, because you don't want to get too enamored with the idea that, just because we had all this good stuff, this is guaranteed to hold. We could still break, You know, eventually they could break through this area and go all the way down to here. I don't know what they're going to do. I don't have to know what they're going to do, nor do you. All you have to do is just wait until fibs and triggers line up. Take a shot, manage out if you have to, and sit back and reload. Now, we do have 15 minutes until the NASDAQ open. Not that they're really waiting for the open, but let's take a peek at it. You guys want to take a peek at it? I don't expect them to go psycho crazy for another 15 minutes. You know, they're pretty subdued, I would say, before the bell. But once 9:30 gets here, I guess all the algorithms or whatever kick in, but it's a madhouse for a little bit. So let's get a read of our big chart on the NASDAQ and try to figure out what the hell's going on. Tell me if I'm off base here. We have divergence from the low at fibs, which is good. We have a second divergence from the low from fibs. That's good. The bad news is we also have resistance that's holding like a champ, which puts us into the it might get choppy range, because half of the fibs say we're going down, half of them going up, and now our trigger lines are kind of, mismatched. So there's not really much to do. Did you guys see some of my earlier posts? I don't know if you guys looked at those or not. There was some short opportunities. Obviously, going back on the chart, for those of you guys who were up early, you were rewarded really pretty nice. Going back and doing our chart reading again, this is the type of area up here at the top that we love to see with our software. Divergence, triggers rolling, triggers getting strong. And then obviously some continuation to the downside. This is traditionally the ideal look. Whenever you have resistance with one-to-ones, with divergence, everybody know all the words I'm saying here. Divergence is that little negative sign. And again, this is one of those situations where you'd be taking trend trade shorts until you get to fibs, and then you have to evaluate what the fibs are doing. And as it gets through the fibs, you're going to continue to take shorts. And then I would put this in the 99% typical file. Notice what happened. Our triggers got weak and we stopped in the middle of nowhere. Remember what I was telling you about crude oil? What are we waiting for? We're waiting for the small triggers to roll back over. You'll get the same thing on NASDAQ, everything else. So let me label this for you. Watch. Weak triggers make a... Oh, man. Hang on. There we go. All right. Forget drawing on that thing. I'm going to draw on what's easier. So, bear with me. Everybody okay with this? And then, ultimately we got to here, and this is where, they're going to end up making the bigger retracement for us. And it's almost the same thing every time. Weak triggers. Let me ask you guys a question. By show of hands, who has watched the good tops and bottoms video? Yeah, and you can't watch it enough, but this is, Again, whenever you have weak triggers that make a deeper retracement, this is where they run back up to the midband and fibs. And then after the small triggers roll over, they usually finish the business down to the fibs. This happens every day. This is like 90% of the time. And if you guys saw me today, I was selling and trying to sell, and I sold several times trying to get the rest of that move down to the bottom. And this is a very, I could put this one in the user guide. I'll give you guys a copy of it just so you have it. But it happens all the freaking time. And, it's what we call, when you get this bad bottom, they have a tendency to finish the business and make it down to fibs. They just do. And now we're in, a holding pattern. We open in 9 minutes. So could go up, could go down. There's literally nothing to do. Bear with me here for 2 seconds. I'm going to change my workspace a little bit, and then I'll show you guys what I'm doing. Damn this thing. All right. I'm going to make it easier to teach. Oh, by the way, while I'm building a chart here, I didn't do, the programmers did, but they did a ton of freaking work over the last couple days. And we will very soon have another update to the software. There are still 1 or 2 small issues that Ninja has where it seizes up. Most of the time it's pretty crash free, but we have identified a couple more areas. So we're coding around those last couple of things now as we speak. And not only that, we've also done a lot of speed optimizations. The programmer that I have is freaking awesome. And he's doing some speed optimizations, so everything that you had will load at least 2 or 3 times quicker, which is really cool. Anyway, long story short, I'm going to delete this chart. I've changed. Check this out. This is going to make my life a lot easier. Mark will like this too when the time comes. Every indicator. So look, there's a cool thing that you can do in Ninja 8 if you haven't seen it yet. Instead of opening 2 workspaces, you can open tabs down here at the bottom. So you could actually have 2 or 3 or 4 different markets running. So we could actually say, let's watch the crude oil large chart for when it comes back around. And we can watch the NASDAQ small chart to see where we're at. That's not the right template, is it? Let me load the NASDAQ template. Yeah, so here, watch. I'll do it on the range chart since I still have that one to go. So essentially what you do, and let me clean up these drawing objects. What you're going to end up doing is click this little tab down here at the bottom. And it's basically create a new chart. So I'm going to build our crude oil chart, and I'm going to go ahead and build our range chart. So we got an 8 range crude oil market flow with 8 range template. And it'll actually put that on the chart. I'll get it out of the way so we can watch here. Anyway, it's a really cool little deal that gives you the opportunity to have multiple charts with less screen real estate, which I think is a pretty cool thing. And it makes it a whole hell of a lot easier for the poor educator who has to flip back and forth between charts. I hope not, P. I don't think so, is the answer to your question. All right, guys. So, again, look, crude oil is a little bit range bound, but we're not going short because of the good bottom, right? And you can see we've ended up kind of in the same situation that we were in before, where, you know, now we've got 3 divergences on the bottom, right? And we also talked about our small triggers rolling back up again, which is kind of the precursor for going long. I know we have some resistance, and, you know, again, this is one of those areas where it's okay to let this one break before going long. Does that make sense? It's okay, just let it break. Probably is going to, and it's probably going up to here, like we had drawn in the box. But let's not get ahead of ourselves, and we'll wait for a little breakout here. All right, so we've been through this several times, and that's a really great question. It's not price breaking through, it's triggers breaking through. So good pickup on that one. Now, some people will be a little more assertive, saying, I know for sure that I've got a good bottom. I'm going to be a little bit more assertive at the 80 area. You know, and again, that's gambling. And look, sometimes gambling pays off, right? So I know we have a little bit of a fib up here, but this is where, you know, you basically have this line in the sand right here that if they get below it, we'll have to see what happens. But I would fully expect them at this point, after a third divergence on the large chart, to continue to the upside. So again, just going back to our large chart. Here, let me clean up. Remember, we were saying we already have a good bottom. It's already done. So, you know, again, no short trades is our thought process first. We had a first little long opportunity over here that kind of gave out, which, again, we saw it giving out on the small chart. It wasn't a big deal. They retested the low. I would have loved for them to stop everybody out by a couple ticks and then go up, but double bottom's good enough for me. I don't know about you guys. And then ultimately, you know, again, we have to, you know, there's two schools of thought, right? Some people will be a little bit more assertive knowing that the bottom is in, and they'll try some type of momentum style trade. If momentum trades aren't in the cards for you, that's okay. We can wait. Now, I did put this other list of videos together because I know when I say the word momentum trade, can I make that bigger? Wish I could do that. Control plus sun. I put this video together right here, which is like, I think perhaps one of the best videos I've done ever. So save that off if you haven't watched it. And I'll put this list in there for you. But essentially it was me going through the charts, talking about good tops and bottoms, high volume area and momentum trades and trades. And we got a lot of conversation about divergence and when it's important. I know the video is a little bit fuzzy, but I think it's one of the best videos that I have done. And again, look, we're anticipating Fibonacci resistance to break. It hasn't done it yet, but we're anticipating that it's going to. Are you guys okay with that thought? because of the quality of the bottom, we're anticipating it's going to break. And again, there's two schools of thought: wait for it to break, and then buy a pullback to it. What's the other school of thought? It's a good bottom and do some type of momentum trade. Did anybody get long again, just out of curiosity? And if you did, what are you guys doing? Anybody do anything? All right, we'll leave that be. We do have the NASDAQ open. $92 long, Elvis. All right. Again, look, I think this is doing exactly what we anticipated it was going to do, which, again, they retested one more time. The triggers are going up. You can see we're breaking through the fib as anticipated. So what does that mean, guys? Can we do a trend trade now with the thought process that we're going to be going up again? I got rid of my large triggers, but you don't really need them because you can see them over here. They're going up. So yes, here's the problem. This is the time they never come back. Have you ever got that feeling in your head where it's like, damn it, I know they're going up and they're never going to come back? That's the benefit. And if you guys have trades, feel free to put them in. But that's the benefit of doing momentum trades off of the bottom. After you recognize a good bottom is in place. We had one of those earlier on the NASDAQ. I wanted to show it to you. I made a picture and put it in the room for you guys earlier. But look, it's absolutely the edge of fibs. No triggers are going through it. It's the edge of fibs. No triggers are going through it. It's the edge of fibs with market flow, long signal, long signal, long signal, long signal. So the market flow is confirming. And for me, again, when I put the NASDAQ plan together, if you guys saw that plan, it says that all three charts have to agree that we've got a bottom in order to do a momentum trade. And for me, look, any type of good momentum trade, if you can put them both together, has this vertical small trigger and, if possible, something in the market flow that helps out. Let me blow this up for you real quick. Let's do this. I'm going to blow it up for you real quick. And then we'll go look at the NASDAQ, but I assume it's moving now. Okay, so again, look, the thought process that we have a good bottom. And again, when I look at the market flow at a bottom, what am I looking for? I'm looking for the bottom to hold, no triggers below it, and I'm looking for buy signal, buy signal, buy signal. Whenever you see that 2, 3, 4 buy signals in a row off of the bottom, that's a really good indication that the market flow agrees with, basically the volume analysis agrees with the Fibonacci analysis. Now, and again, anytime we get a bottom, we're looking for the high volume line as an entry area. Everybody agree with that? That high volume area trade. You may not do it yet, but that's okay. And then ultimately, when we're looking at our smaller chart, either a 5-1 on crude or the S&P or gold or the 13.2 on the NASDAQ, this is the look for a momentum trade, period, especially the NASDAQ. Take a picture of it and put it in your portfolio. Small triggers have to be vertical. You hear what I'm saying? When I say vertical, I mean like a super steep angle to the upside. They have to be very wide. And they have to also be above all of your other triggers. And you can go back and study the crap out of this look on the NASDAQ. But look right here on this spot on the chart. See that same look? Vertical to the downside. A lot of momentum traders love this look. All right. Type in a Y or an N. Yes or no, you get it. Super vertical triggers. That's the only time, and again, I put together rules. I'll drop the rules on you guys just so you have them. But I think, look, rules are great, but it's the visual. You got to get the visual right. So look, I'm going to put this plan in for you guys. And again, look, the plan says, and again, look, trend trades are trend trades. I think everybody gets trend trades. The look's pretty easy. I think you're going to end up, especially after this week, you're going to look for a lot more of these top and bottom momentum style trades, especially if you're a NASDAQ trader. If you're watching the NASDAQ for the first time, you've already seen this 75 times, haven't you? I mean, you've seen it. You just don't know how to get paid for it yet. And it's very simple. Every chart has to agree that the top or bottom is true. The triggers can't break the top or bottom. And you basically want 21 range and 13.2 trigger lines to be strong. And that's it. I mean, and again, look, that's the look right there. But you have to be able to step back and say the bottom is true. If the market flow helps, these are really, 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 really advantageous trades. All right, let me get back to business here. Okay, so like we said, obviously you have to adjust as things go forward. As we were saying, we're going up, and we know where we're going, right? We've already drawn in a box. At least 16, maybe 26. I mean, that's a bare bones minimum, and then we could very well go up to here. Now, can I ask you guys a question? Now that you have this momentum thought in your head, and is everybody okay with this? You know it's a bottom, and you have this vertical trigger look. Everybody cool with that? Let's go back to this crude oil bottom where we knew it was a bottom for the most part, right? Everybody kind of agreed on that. Could we make the case for some type of momentum trade right there? Could we make that case? Knowing that it's a good bottom. Now, if the market flow chart agreed with it at that spot, I think it would be advantageous. Now, that one's not the best, but again, if you bought right here, look, here's the thing about a momentum trade. Are you ready for this? It's very, very, very simple. If you lose momentum, meaning start making down bars, get the hell out. So you could conceivably buy a momentum trade with 6 ticks worth of risk. 6 ticks. Because if it starts making down bars, then you kind of have to wait for a trend trade. Pretty cool, right? Yeah, you don't even have to risk that much. You're taking a chance with the momentum, and you don't even have to risk much. I want you guys to see something, okay? I always do this because it's so much fun. In 2004, we said if you hit fibs and have divergence and the triggers roll over, sell the pullback to the triggers. That was our trade number 2. Trade number 1 was a trend trade. Just so you know, the market was trending down. It pulls back to the mid band and closes below the triggers, and then you get out with the outer bands and support. No, why the hell would you do that? Not on a momentum trade, Jose. Now, can I show you something else? I know you guys are going to trip out, but in the year 2004, we had a momentum trade. I know you're probably going, what the hell, Novak? That's the same damn stuff you're telling me today. So in 2007, we used the one-to-ones. Granted, they weren't yellow, they were white. But do you see it? Vertical, small triggers, close below the one-to-ones, sell the one-to-ones, and then you get your momentum short. Now, you can use the mid-band or fibs if it's the right situation. You don't have to just do one-to-ones, but that's the first one that we recognized that was pretty consistent. Still consistent to this day. So when I tell you about momentum trades, I don't want you to trip out and go, oh my God, he just made that shit up because he's in the room this week. No, trend trades, momentum trades, and then this technically is your high volume area trade. We just use a little pink line to go short now instead of just the triggers. So it helps us fine tune the area. You're glad I'm talking about it? Cool. So look, these are the same trades today that we've had for 19 years. And you just have to see them enough times and practice them enough times to get good at it. So fibs hold, triggers roll, sell a pullback. If they're all going really strong, do a trend trade. And those are your only two trades. You could substitute momentum for high volume area trade, but oh man, that's about it. That's all you were going to get right there. That's really close. I mean, that's about all you're going to get. Totally not your trade. Yeah, and look, here's the thing. You don't have to do momentum trades. You could just do trend trades. So, look, if you had to do one over here, and if you got one here, cool. If not, hopefully you got a little piece of it. Let me take a look at, I'm not going to fall behind on your charts today, guys. So let me look. Zeba. Momentum short, basically. Can we call it a momentum short? Everything's screaming down. You went short. Might have been better to have a little entry. I don't know why your pictures come through small like this. Has anybody figured that out? Why some people's pictures come through small and some don't? Yeah, you just jumped on. That's fine. I still have to tell you the right thing to do, even though you just jumped in, just in case there's new people listening. So when you do a momentum trade, any trade, it doesn't really matter what you do, you're going to find that when you sell at an area, life is going to be a lot easier for you. Look, your butthole's not going to pucker so much, because if you get in here on a momentum trade, you only have a little bit of risk. If you get in down here, you're going to have to risk way up here. Does that make sense? So, it's really important that you're selling at the areas, and that creates the best momentum trade you can do if you're going to do it. And then look, you made a few ticks and that's really nice. But there was 15 points in there if it was executed properly. Now, if you get 15 points on one trade, that wipes out at least 2 losers, maybe 3 losers. If you get 4 ticks or 2 points and 3 points or 4 points, you're not going to wipe out any losers with that. So you're going to have to hit a really, really high winning percentage. I love the trade. I just don't like the entry. I like it better up here. Make sense to everybody? All right. As we said, there's our first minimum target, and perhaps we make it to the second target. Don't you guys think this is pretty cool? We said over here at the bottom that we had a good bottom in place. And, it's one of those things that once you've seen this enough, you start building expectations that we're not only going to go up, but we're going to go a hell of a lot farther than you think. And it's hard to kind of have that vision in the beginning, and it because all you can see is what's right in front of you, and you don't have enough repetitions to know that we're going to go with a good bottom. We're going to go all the way to 25, and who knows, we might keep going. But for the idea to think about that we're going to make it that far, when you start going long, again, I think this really kind of suits what we're talking about here. But, I mean, you couldn't get any more well-behaved than what crude oil is doing for us right now. Yeah, absolutely, P. And sometimes you have to go long a couple times to get it. You know what I mean? And again, you don't want to go crazy going long, but sometimes you have to take one or two trades, and sometimes you have to get in a couple ticks early or risk a couple extra ticks. But as long as you start building that expectation of where we're actually going, works out. All right, Alan, let me take a look at your picture here. All right. You are long. Beautifully done. You are also using your range chart triggers to help you out here, right? So nicely done. And again, I'm assuming that as you're getting closer to 20, 22, 23, 24, 25, you took some profit along the way, which is awesome. And now we'll see what's up. We'll see if they go a little further. You missed your fill, so you got in based on the range chart. All right. Is everybody okay with this third chart? If you have never used a third chart, don't worry about the dots and all that stuff. Watch, let me show you this. There's your 25. Congratulations. Look, don't worry about the dots yet. Worry about trigger lines. Trigger lines first and foremost on your range chart is what you're looking at. You're not looking at dots. And I know sometimes people get a little caught up in looking at the dots and stuff like that, but again, you're looking at the triggers, and at the time of entry, you're asking yourself, do the triggers support what I'm trying to do? Can I get a reasonable expectation based on the strength of the trigger lines that we're going to keep going up after a good bottom? And the answer is yes, obviously. And, again, it made it all the way to the second fib, and we'll see, they might keep going. Anyway, that's pretty cool, right? When it actually behaves and does what it's supposed to do. All right. Now we'll see if they're going to stop or they're going to keep going. We do have crude oil news in 40 minutes. So they ran it down so they could buy it. And now they're running it up. We'll see what happens next. Anyway, cool use of either a momentum style trade if you were into that kind of thing. The trend trade, you had to give up a couple ticks or else you're not going to get a fill. What's the difference between a range and a Renko? Well, That's a great question. So the range bar chart, every bar is 8 ticks. So this is an 8 range bar. I'll take a picture just so I can freeze it, okay? So Rakesh, look, 8 range means that from the high of the bar to the low of the bar, it's always 8 ticks. 8 ticks, 8 ticks, 8 ticks, 8 ticks, 8 ticks, 8 ticks, 8 ticks. Easy enough? So that's a range bar chart. It's range based. Now, in the user guide, I just want to show you what this stuff is. The very first video in the education right here, Rakesh, is the dynamic Renko bar. And the dynamic Renko bar, and I'll regurgitate a little bit of the video real quick, but it's a range-based bar. But you essentially have, like, let's just say a 13-2 bar. It means that the body of the bar is always 13 ticks, 13 ticks, 13 ticks, 13 ticks, 13 ticks. And you have to have double that size to flip it around to go the other way. So then you have 13 ticks, 13 ticks, 13 ticks, 13 ticks. And the 2 in the bar, like a 13-2, means that for every 2 new ticks in the upward direction, you'll make a new bar. And every bar body is always going to be 13 ticks. And before you can make a down bar, you have to have 13 down and then another 13 down. So it's basically double the number of ticks to go the other way. Does that make sense? So it's still range based, but it's double the bar size range. So when we look at our charts, right, so this is a 13-2 bar. So what that means is, and we'll watch 17 here, so we'll see how this, see if they want to keep going higher or not. But that's what this little marker is, Rakesh, that's on the chart. Do you see this little line that says 7908 on it? That's the price at which we'll make another 13 ticks down and then start making down bars. So if we don't actually go to 7908, we're never going to make a down bar. Which means what? If we're making up bars and our triggers are up, what are we going to be doing? We're going to probably be going long. So in essence, the short version, the moral to the story is, when the bars are going down, we want to sell pullbacks in the bar until we hit some type of Fibonacci support that says it's time to stop. And then ultimately, when the triggers are going up strong, we want to buy pullbacks against, the thought of not making a down bar. We don't want to make a down bar. And the same thing, where we're at right here. We want to buy pullbacks with the expectation that up bars are going to continue to make more up bars until we run into something that tells us we're not going to. So essentially, we're buying pullbacks on the small chart when the large chart's going up. Does that make sense? Okay, so here's one more that somebody's doing. P. So the market was going up, and he bought the market on the way down, wherever he bought it. And he said because there was a market flow signal, he's only risking three or four ticks. So he's got virtually no risk to be in a long position. Which again, this is the importance, like I was telling you about Zeba's chart. Sorry, Zeba. The importance of being able to sell at an area if you're going short, because then you can really get your risk down to a very small amount. If you lose, look, losing a few ticks is no big deal, right? Easily recoverable from. Losing 10 points, on the other hand, takes a lot more work to recover. All right. So, Paul, I'm assuming you got your first profit target? So, first target was hit for you at 28, and then now you're basically break even plus and let the chips fall where they may. Hang on for the next red line, or let them take you out with a condition. I like it. I can't argue with it. So look, guys, I'm not doing a lot of going through rules. I like going through charts better than rules. For those of you guys who really need somebody to kindergarten your way through the rules, I want you to see something. The first hour of every one of these videos is my brother, who it's his anniversary yesterday, 25th anniversary. Congratulations to him. If he's not watching this video, he knows this stuff. But so check it out. Every one of these videos and these videos and these videos and these videos and these videos spend the first hour for the new people going through the rules and going super slow with the rules. So we've got the rules covered, guys. I mean, we've got so many videos. So, I'm not trying to spend as much time with going through the rules slowly. So again, if you're new, please watch those videos. I think when you're also new, the most important thing that you can do first is make sure that you've got your trigger line reading down pat. Because once you can read your trigger lines, it's really freaking easy to see which fibs line up with the triggers. All right, Paul from earlier. Okay. Yeah, they were being a little difficult on this one, weren't they, to get down there. Nice short. That was the S&P. Paul, can I make a suggestion? Number one, make sure you upgrade your Ninja 8. You don't need Ninja 7 anymore. But your chart should be identical. So whatever you're seeing on your 5-1 chart, you should also have on your 13-2 chart. And for some reason, I don't think you have your synthetic fibs or anything turned on over here. So now that we've pretty much solved not all of NinjaTrader's crashing issues, but most of NinjaTrader's crashing issues, we should have another version out for everybody next week. That we found the other two things that cause crashes. We found them. We're coding around them. It's going to be done. Have no fear. 100%. I'm certain of it. While we were in there, we also did speed optimization, where everything that you have is going to open and draw a whole lot faster and a lot more efficiently, which is also going to help for those of you with less than supercomputers. turn on your tick replay, and did you do the upgrade? Let me ask you a question first. Did you do the upgrade? If you did, turn on your tick replay and apply the template for the 5-1. That's all you got to do. All right. Paul, I'm assuming with a third divergence, you're out of your position short term. All right, Bobby, let's see what you got. All right, so Bobby, you went short with the market flow high volume line. All right. You know, Bobby, I'm not messing with you, and I don't care what. Oh, that's Sophia's. Okay. Can I ask you a question? Sophia, why do you have these triggers on your range bar chart? Just out of curiosity. I'm just wondering what that trigger is. It just looks kind of different to me. I just don't understand the logic. Because, you know, look, when you guys are doing, you were playing with it. Okay. The only reason I say that is because ideally for high volume area trades, you want to have some type of trigger line helping you out. Which, dang it, hang on, my thing is stuck here. Right? So ideally, this is kind of the way I put it together. If you're going to be using a high volume area to go long, you want to have helpful triggers, or vice versa. If you're using a high volume area to go short, you want to have helpful triggers. Does that make sense? Every trade you do should have an area and helpful triggers. Just use those two words together. I had an area and helpful triggers. And that's a trade setup. You could pretty much trade any damn area that you want to with those two rules, but Fibonacci resistance and a high volume line with helpful triggers. That's the trade you want to take. When I look at yours, I see fibs and a high volume line, but I don't see helpful triggers. And I look over here on this chart, you know, the 34.5 chart, I don't see helpful triggers. So yes, it worked. That's fine. I guess maybe that's a helpful trigger, kind of. But anyway, it worked and that's fine. But I'm just saying in the long term, I think having helpful triggers at those areas is going to be more beneficial in the long run. All right, Mike. All right. Long trade. And, you know, look, this is a really cool thing, too. I don't even know. What market is that? 1966. Is that S&P? I haven't looked at the S&P in so long. This is a really good use. Oh, gold. Okay, that makes more sense. This is a really good use of Fibonacci support, strong triggers, and triggers helping. Sophia, you see what I'm saying here? See how we went long at the high volume line with all the triggers helping? That's pretty much A1 primo numero uno high volume line look right there. I like your little dark high contrast look, Mike. It's pretty cool with the darker background. I like it. It's cool. Helps on the eyes? Yeah. All right, guys. So, look, now watch. We can switch to the NASDAQ just by this. You see these cute little tabs at the bottom? So here's our NASDAQ. Let's see if we can assess what happened. Again, we were in this opening range. Remember, we talked about it could go either way, and it did. And then ultimately, excuse me, man, I think puberty just kicked in. Hang on. There we go. As we look at our charts, for the new user, there should be a couple of spots on here that really stand out. Number one, when we break fibs with all of our triggers, again, sell, 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 sell until the cows come home. And then the reverse is true if we put in, termination at the bottom. So divergence is nice, but it's not enough. Pivot stop out with a second divergence is more nice, but it's not enough. Second divergence with a pivot stop out with strong triggers is enough to start thinking we're going up. Okay. Right click on your chart and go to data series. Make sure that you have your tick replay checked. And then right click on your chart and load your template. You were looking at 5-1, so you need to load your 5-1 Dynamic Renko Bar 2023 template. 10 days on all my charts. You good with that, Paul? Turn on your tick replay, reload the template. Yeah, that's okay. Or tick replay is not enabled either way. All right, guys. So look, first step of making a top is in place. First step, not the last step, but the first step. Divergence from a fib is going to get us to the mid-band and the fibs, and then they're going to go retest again. Why do I know that? Because they do it every freaking time, and they're going to come up here, and then we're going to make decisions on whether we're going down or not. Yeah, so, you can always, again, hopefully somebody got some long trades on the NASDAQ to get up there. Are all my new traders okay with strong triggers, buy the fibs, close your eyes, grit your teeth, and hang on for the red lines and hope to God it makes it? That's your trading plan? Now, is it going to bounce up there guaranteed? I don't know. Probably so. It usually does. It doesn't have to. What is it going to take for us to go short? What is it going to take? It's going to take both triggers going down strong for us to go short. So it's very simple. Is there both triggers down and red and strong? This one and these? No, not yet. Not saying it can't be that way in a minute, but for now it's not. So this area right here is going to cause us, they might battle it out for a minute, but we'll see what happens. Generally, they go back up and they retest the highs. And the reason I say that is because the first time up here, the triggers were really strong. See those strong triggers? So that's a termination area where you say, hey, I'll stop going long. But it's not enough to say, I'm going to go short yet. So we either need to break this box that we're in right now with both triggers, or we got to wait for them to kind of go back up and kind of reset this again. So we'll see. Do you guys want to watch NASDAQ for a minute? I'll leave it on, and I don't care what you guys want to watch. I'm gonna take 2 minutes. I'm gonna take a lap around the building. I'll be right back. If you guys have questions, put them in. And again, if you don't like the way the market looks at the moment on the NASDAQ, all you got to do is wait about 3 minutes and it'll be different for you. So I'm going to leave this running and I'll be back in 2, 3 minutes. All right, guys, I'm back. Sorry about that. So look, very freaking typical. We're still waiting for it to get back up here. Realistically, it's probably a long to get back up there. Because, and again, when we were talking earlier and I was saying it's probably not going to be time to go short yet, this is a very, 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 very typical pattern where you get forced into this. Can you guys hear me okay? All right. Okay. This is a very typical pattern that happens when you have a, okay. Come on. Ignore it. Why is this doing this to me? Bear with me. I'm just going to make this. There we go. All right. Can you guys hear me okay? For those of you who can, awesome. For those of you who can't, go check your settings. Probably something's changed. Anyway, look, long story short, guys, before we can really take a good short, we need a good top. And again, while I know that this looks extremely tempting to go short, and it's not that it didn't go down, it did go down, but almost always when you make the first push up and the triggers are strong, they're going to make that second push. And I mean, they almost always put you into what's called a 50-50 trade. Let me show you what I'm talking about. This is an old picture, but a 50-50 look is this look right here, and it usually happens after a strong push up, when the triggers were really strong going up the first time. This probably looks really familiar to you right now, doesn't it? I mean, this is exactly what just happened in the NASDAQ. And it happens so often that obviously we defined it and we have rules for it. And these are the ones where if you get hyper committed to going short, you're going to end up getting your ass kicked, and then it's going to go the other way. And you're going to be like, God dang it. So a 50-50 look is when the large triggers are still above an area and the smalls are below, for all of you guys who are new. And yes, they're all down, and yes, it's red, and yes, it looks strong, but location of our triggers above an area versus below an area, you basically have, and I guess I should also add, 50-50 is not the chances of a trade winning. You have about a 70 or 80% chance of a trade winning when all the rules are met, period. 50-50 means that 50% of the triggers are below an area and 50% are above an area. And what generally happens is, it usually is predicated by a strong push up in the market almost every time. And again, this one didn't have divergence or fibs like the other one did, but it's usually predicated with a really strong push up. And I want you to think about it just in a general sense of people who trade 30-minute charts or 60-minute charts. This is nothing more than a retracement on a bigger chart for somebody else to go long, right? Big push up, they buy pullbacks. So this is where after that big push up, you have to really be aware of these 50-50s. And what happens is, again, look, this is what it looks like in the real world. The 50-50 generally goes back up again. And then after they either have to do one of two things. Make a lower divergence, which is freaking awesome. Now we can start thinking that potentially we've made a top. We'll see. We got a little support to get through here, but now we have a better chance of a top being in place. I mean, you're not going short yet. Every time you get to a spot, ask yourself the question, how many triggers are below this area? Quick, put a number in, type it in. 1, 2, 3, 4, 5, 6, any? How many triggers are below? 0. Which means it's not yet time to go short. When there's no triggers below a fib, it could go back up one more time. I don't know what they're going to do here, but we'll find out. They're either going to break out. Yeah, I mean, something different has to happen other than being at support with the triggers above it. And if it breaks out, which it may very well do since we've had a second divergence on our larger chart, now, and again, look. The NASDAQ is quick. You got to chase it down. Anyway. They're not going to let this go easy, are they? All right. We have now pulled back to an area, but we've got another problem on our hands. What is it? What's the other problem on our hands? We just hit support. So now maybe we go finish the move and get back up here one more time. So I would be looking for continuation longs if I got them here. Sometimes the NASDAQ gets a little streaky. But the fact that we've had a couple of divergences starts to set the stage that, if they do get back up here, remember what we saw in crude oil? Let me go back to crude oil at the bottom. And I think we're almost in the same circumstance that we had at the crude oil bottom. Remember we had divergence from fibs with kind of strong triggers, and they retest, and then eventually they finally said, hey, we're good with that bottom, we're done messing around, and then they take off. And they're still going up. Nothing has changed, really. Not yet. We do have crude news in like 4 minutes, so cautious on that. So we kind of have the same thing going here on the NASDAQ, where we had divergence right from a fib, but it was really strong into it. Then we had a second divergence. It's like, okay, but support's holding. So now my guess is we're going to go back up there one more time to retest the fib support. And you can see where that's going to happen from, right? Inside this window, basically. And then we'll see. I mean, if they break below 12, I would say they're going down. But if they stay above 12, then I say we're going up to retest 36. We'll see. All right. Why no large triggers? You're talking about on crude oil? Because I wanted to show you the simplicity of just one trigger. if the small triggers are going up, you either have to take long trades or nothing, Gary. Or Paul. Sorry, whoever. Pete. So you never even have to worry about thinking about a short trade if the small triggers keep going up. Is that easy enough? I mean, if the large triggers are strong, it's even better. If the large triggers are strong, but even inside of it, it doesn't really matter. If they're still going up, it's still going up. So just for the sake of simplicity for what we're doing in here with the education, how would you turn off the dots on your 8 range? Just reload the easy way. Look, right click on your chart and go to templates, Derek, and go to load, and then load generic range chart without the market flow. Generic range bar chart by itself, and that'll get you. Now, if you want all the fibs, you have to leave the 8 range template on, and you're going to have to format the indicators, and you're going to have to remove the market flow. I mean, I hate removing the market flow. Just don't stare at the dots. But if you're just getting used to the triggers, just highlight the market flow and click remove and click OK, and then that'll do it for you too. So one of two ways to do it. Well, the market flow does make the dots, so you can't have one without the other. All right, NASDAQ has made up their mind, it looks like, with a third divergence. All right, third divergence, guys. You don't need much more than the old third divergence to let you know that the party's over and we're going lower. Yeah, I got crude news in 2 minutes. You see what we ended up doing here, guys? I mean, they can't even make it back up there to the high, which I was really kind of surprised about. So we get divergence, divergence, divergence. Now our triggers are rolled over. They're not super pretty for trend trades because the small triggers are kind of on the wrong side. But with that third divergence, now we can start anticipating we're going to go visit the bottom. So if you look at your chart and say, what's the bottom? Down here at 15,885, you guys see why I say that? It's the prior divergence low and it's the fib. So now that we've got 3 divergences, the chances are if you took a short, I think you're going to be headed in the right direction. Because that's a quality termination condition. As much as they fight and kick and scream about it, they'll probably end up down at some lower fibs. Zeba, you're thinking of focusing more on gold or crude? Yeah. Well, NASDAQ is one of those ones that when it's really good, it's really good. And when it's not really good, it's treacherous. Yeah. Have you guys ever watched crude oil news? Here. We'll put it up for you real quick. When the crude news comes out, I don't know who the hell gets paid to guess at what the crude oil numbers are going to be, but they suck at their job. And it's an intentional thing, so that way they can manipulate the market and drive it up or down wherever they want to buy it, and we don't have any control over it. So, I mean, they literally miss the number every week. Yes, Kay. I sent everybody that message. Did you not get it in your... Discord. Just log into tech and tell them you need to upgrade. Here, I'll give you a link. Make your life even easier. Now, we are 97.5% crash free. But I did put out a version that I knew was not 100% because it's 97%, which is pretty damn good. And most of the time, you're not going to have any crashes if you don't mess with your charts. It's really, for me, I mean, I did have one crash yesterday, of course, in the middle class, but really much better. We've already solved 2 more instances that cause crashes. So if you've still had one, it's okay. We're on the case. So we'll probably have another upgrade, I would imagine, sometime next week after we get done and get the testing done. Now, when the trend changes, it's a good time to have your large triggers on, by the way. On the NASDAQ chart, are we still second shot? Some type of very little risk to try it again. Here, let me give you, look, so you have it. Here's a little link with them. All right, do you guys understand what I just said? Again, you know, if you were short, you're in a situation where you're like, God dang it, they had a condition, and this is an appropriate use, like I was just saying, for a momentum style short trade. And if you don't have momentum, God dang nabbit. Why the hell is this? There we go. You see what I'm saying right there? I'll put an arrow on it. That's a really good case for termination on the large chart, really strong small triggers on the large and the small chart, and you get a little momentum pop right there. And again, with momentum, if you lose momentum, you don't have to stay in the trade. So you basically have to continue with the momentum, or else, you know, it could turn into a trend trade after that. Momentum is great until you lose momentum. I don't know, Paul. Let's take a look. I mean, obviously, we had news out. So again, you know, how quickly before news do you want to trade? And, you know, again, did we make a good top? You know, again, maybe it's not quite the best top. But, I mean, that's not a bad look if you were going to take a gamble, right? If you're going to take a gamble, but this one doesn't fit the rules. It looks really pretty after the fact. But this is more of a, the areas and the triggers all agree, so I'm going to try to take a short trade versus all your rules are true. Can I show you guys a little secret? Watch. I'm going to scroll back on crude oil, and I'm going to train your eyes to one thing that's going to make your life a whole hell of a lot easier. You ready? Trend trades that have both triggers, large on the 5-1 chart and the 13 chart together, kind of touching in the same area, those are the better trend trades that you can come up with. And as you scroll forward and you start, you know, because there's a lot of trend trades, don't get me wrong. But when you get that one trend trade where all the triggers come together at the same time, look, no divergence on the low on the small chart. So watch. Get the big chart, down triggers. I'll say yes, yes, yes. And then we go to the small chart and we ask ourselves a question. So when I say, is there divergence on the small chart, this is what I'm talking about right here. And what you'll end up finding as you go through and you study 50-50 looks, the ones that have divergence, it's not that they don't win sometimes. It's preferable to wait for a down bar first, especially on like your market flow chart. Like if you were waiting for a down bar on your market flow chart, that would end up being your short trade with a 50-50. Now, I'm not saying that's a short trade. This is on sim, so. But when you have a 50-50, it slows you down. I mean, this is going to end up losing anyway, but you understand what I'm saying? So watch. I'm going to take a triple picture for you guys, and then I'll manage this thing in 2 seconds here. Now, don't take that trade. It's not the optimal trade. But I'm giving you guys a rule that you can use in your trading that's going to help you out quite a bit. Bear with me here. All right. If you have a 50-50 look and divergence on the small chart, wait for at least one down bar before going short. Now, I'm probably going to get stopped out of this anyway, but what this does is it slows, like P just said, he got run over, which doesn't surprise me. This is a very, 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 very common look. But look, I'm going to give you a rule that's going to help save your bacon a little bit. And again, I'm probably going to get stopped out of that, but I just wanted to do this so you could see a visual on the chart. Now, you guys have probably seen this rule before. But I'm not sure if anybody's made you a picture that you could put in your plan and just... All right. There you go. Now, let's take a look at it. And again, I'm not saying that that's the best trade on the planet. I probably wouldn't want to be in that much longer, but it gives you a fighting chance. And again, I should probably be out of this thing, but I just wanted you to see it. It's a real simple process. The large chart said I wanted to go down. The small charts were 50-50. So hang tight. Wait a minute. You get a little bit of a different entry because, you know, again, this is sim, so. Is everybody cool with this? It's a nice little routine that will keep you out of trouble. And again, once you actually get the down bar, you know, again, I would say that this is probably not the right trade anymore, but you can decide whether or not you still have your conditions met that make you want to take a short trade or not. And if you do, then you can take a short trade with a down bar, and if you don't, not a big deal. All right, G, let's see what you got. All right, so we're looking at your rules, and it says 50-50 trades with one divergence on the 5-1 use a market flow signal. So you recognized 50-50, which is awesome. You recognized you had divergence, which is awesome. And then you said no signal, no trade. And technically the signal was on the bar where I went short, right? The down bar, if you were going to do it. Now, the conditions changed, so it wasn't really super favorable for a trade short anymore. But then you can at least have an option to take it or not take it instead of just getting run over and saying, what the hell happened? And let's see. Go get him, killer. That's my little 6-month-old Maltese. I think she's up to a whopping 7 pounds now, 6 pounds, 5 pounds. All right, let's see what you got. All right, so all right, you ready? All right, I'm glad you have the circle on here so I can digest what's happening. I have to digest this for a second. Figure out where your actual entries were. All right. Now I'm going to blow this up so everybody else can see it, okay? Look, I love nothing more than dissecting what happened, okay? Because, look, we all kind of get jumpy sometimes, right? So I want you to see, learn what we're talking about here. So, again, I'm assuming... or let me rephrase that. I should not assume. The idea with what Nexgen offers you guys. Hey, did you update your software? I'm just curious. So, sorry, I had 3 conversations. Are you running synthetic triggers by any chance? Because if you're running synthetic triggers, stop. And I just want to get this out of the way real quick, and then we'll get back to that chart. Sorry, I hate to digress, but while we're at it. The synthetic trigger still has an issue that would cause crashes, and it's a real easy fix. Don't plot synthetic triggers. Use the other triggers. So let me give you a picture. Instead of using the synthetic trigger indicator, use the regular trigger line indicator, use different time frame. And that is 95% less crashes than the synthetic triggers. We've already fixed the issue, but you don't have it yet. So that's the short-term solution. Whichever chart you oh my God. If you don't run synthetic triggers, you're going to know it because it's going to say T3 trigger lines synthetic down here at the bottom. If you don't run these, then you don't have to worry about it. If you run them, then don't, and run the other ones. Okay? So anyway, sorry about that. I digressed. Get with Jason if you need help with your trigger lines and you don't know what to do. So look, LH, you didn't sell any type of resistance and you jumped in down here. This is where you got in. Had you have just sold at the mid band and put your stop above the fib, so you could have had the same risk. But if you actually would have sold the area instead of down here in the middle of nowhere, you would have won your trade. You would have had to sit through some shit, but the fact that you said, oh shit, I'm going to miss it, let me get in, and you got in down here instead of up here, that's the only reason you lost. You had the right direction, you had the right everything, you had a crappy entry at the wrong spot instead of selling some type of resistance. It's the only difference. So I want to make sure you're okay with that first one. The fact that you paid so much doesn't mean you can't put your stop. You still have to put your stop behind resistance, or you're just asking for trouble. So first one, I think is pretty easy to see, just a bad entry. And then the second one is you're pissed off because it's running without you, so you jump in. Again, you're kind of jumping in at a prior divergence low, so you're just jumping in because you're pissed off. And I understand it, you're pissed. So, and that one goes down a few ticks and you actually make a little money on that one, so no big deal. And look, here's when you get to 15,598, that's over here. How many triggers are past the support? Not a lot. And I understand you're trying to get in and, again, you're trying to break that support. But you got in at the mid-band. You made money on that one. And then after, look, a double bottom at 1-to-1s, at a fib, you sold again. And the problem is you're going short at a fib. There's no room to run anymore. You've already run where it was supposed to run to. And then you have to kind of recalibrate and wait for that area to break. So it's like, here's the thing. Okay. So this is very, very common. I do this too, because sometimes I lose sight of what the hell I'm doing, and it happens to everybody. You know where it's going and you screw up your entry and it gets you out of rhythm, and then it makes you do crazy stuff. And it just seems to kind of compound itself. The problem is you did everything right except your first entry and first stop placement. If you had it right, you would have made all the money and you would have been really happy. You might have done the second one, and then that should have been it. And you can see, look, tell me if I'm mistaken here, guys, but there's no triggers past this blue fib, so that's going to cause a little bit of trouble. And if you go down to the market flow chart, and again, I'm not looking at anything else except the bottom. Blue fib, yellow 1-to-1. How many triggers are below it? 0. So you're trading into a termination condition. And again, trade to a termination condition is cool. But once you get a termination condition, you got to stop, and you just forgot to pull in the reins and stop. And that cost you big on the last one, because you're basically selling after support holds the second time, which is going to always make it run up higher, even if they go down again. So fear of missing out, or bad entry on the first one with a bad stop. It's the bad entry that made the bad stop happen. If you would have just said, hey, I got a shitty entry, but I still need to put my stop up here, you would have lived without the loss. But bad entry makes it almost unmanageable or unpalatable to lose that much money. because there's no guarantee that if you get a bad fill and you put your stop above the fib, they won't break the fib. I can almost guarantee you that if you get a bad fill and put your stop way above the fib and risk 15 points, they're going to break the fib and you're going to lose 15 points because Murphy is watching, right? It's like there's nothing. So anyway, hopefully that's helpful in going through it and looking at it. But it looks visually pretty easy to me that you're just selling into support. Now, I know it's not super fun for people to tell you what you did wrong, but we're in desperate need of a breakout, hopefully to the downside. We'll see. Or, you know, if the breakout's up, that's fine too. I don't care what happens. But we really need somebody to make a commitment on crude oil one way or the other here. That would be my read. Hurry up and wait. That's your read too, right? Hurry up and wait. Okay. Now, I had drawn a box in earlier saying we're probably going to make it to at least here because of the third divergence. It's always nice to draw in a box on where you think it's going and then go back later and see what happened. So I want to make sure that everybody who's new is on the same page. When we have resistance at the high, that means no more long trades. And then ultimately it took a little bit, but we had 1, 2, 3 divergences. And then, you know, again, 3 divergences is a termination condition, but it's not super favorable to go short until the triggers are stronger. So, you know, not until both triggers are going down do we have easier short trades, which, you know, again, when you're looking at it right here, you're saying to yourself, we're going to go down. And much the same way we did on crude oil. Remember what we said about crude way back over here this morning? We said because of the third divergence and the quality of the bottom, we're probably going to go at least to 79.25. So because of the multiple divergences at fibs, we start thinking, or you should start thinking, we're going to go farther. Farther than I think we're going to go on a small chart. And you get the same exact pattern that just happened on the NASDAQ. 3 divergences and the triggers get going. And now we, you know, that's why I was thinking we're going to at least make it to 85. And, you know, when you go back and look at it later and you're like, damn, 3 divergences and strong triggers is a thing. Well, just put your order a few ticks above the buy spot. But here's the problem. P, you ready? You have to have some type of contextual awareness before you give up ticks. So we had already built our contextual awareness of what was happening on crude oil way down here at 8 o'clock in the morning, and then again at 9:30. We were already saying it's a bottom, it's a good bottom, and we got to find a reason to go long. Where we had talked about a momentum trade on the small chart, and then, you know, on the large chart, if you just look at this, I mean, obviously we got some circles there where we were, but if you're expecting it to go to 25 or 26, somewhere up there, right? You can try to get in 1 or 2 ticks lower, but if you miss it, you're missing, you know, over 1 or 2 ticks. Given the context of the market, meaning the quality of the bottom and the strength of the triggers, you have 2 choices. right? Just put your order a couple ticks higher so you get a fill. Or you have to have a secondary conditional to get that last one little tick worth of entry right here. So let's look at the spot. You're trying to get that last one or two ticks, and you have to kind of read your indicators. And, you know, again, if you miss it, just tough titties. There's just nothing you can do about it. But given the context and the strength of the triggers, I think, you know, paying a little bit extra is okay. I think the second one was easier because we actually had Fibonacci support helping us out. Well, but it's not just the larger push, it's what happened at the bottom. I'm just trying to stress this. We talk about good tops and good bottoms, and 3 divergences from Fibonacci support is a really good bottom. And then strong triggers on your large chart is really, really good. I mean, it's basically almost guaranteed to go up 20, 30, 40 ticks. There's no guarantees in this business, but the odds are 90%. Yeah. And then obviously more continuation to the upside with strong triggers going up from fibs. That one should have been a little bit easier. And then now, like I said, we're in a situation where we need some kind of breakout to the upside or downside before things get easy. And again, I don't care which way they break. Fib support is holding, which is nice. That's fun. Let's get back on the long side if we have to. Plenty of room to roam to 100, isn't there? If you step back and say, okay, where could we really go after a really good bottom? Think about this, guys. After a really good bottom like this, you could look up at the end of the day and we'll be up here. Could you make a case for that looking at this chart? After a really good Fibonacci bottom, there's a good chance we'll see 80.05 or 80.10 before the end of the day. Unless they put in a really good top, which I don't see happening anytime soon. So they went down a little bit, made a 50-50, and then turned back up again. Do you want to see my stock picture for 50-50 that I've used forever? Check it out. Watch. This is old. This is like a long time ago. Crude oil was at 103 at this time. But this is so freaking tip back. If they do, then we should get back into our zone and then be able to party with it. What if I have this look on a 21? What do you see here, Jose? I only see one thing. Tell me if I'm mistaken, but I see one thing and one thing only. Support with no chance of going down, so it's going up. Sure thing, David. So what do you see? I see support with divergence, no chance of going short whatsoever. That's what I see. This is because in your main settings, you're not using slate dark. Hang on a second. I got to figure out where the hell this is, but go to tools and options, David. Tools and options, and you've got the light color, I think. Oh, I don't want to do that. Where the hell did that just go? Of course, I guess I just changed it, so I'm screwed now, but it's gonna change on me when I restart it. Dang it. So David B, that gets you straight. Obviously, got to restart it for it to take effect, but. All right, guys, can I remove my predictor arrows and we'll just leave this here? You're going to get an arrow to the upside almost every time. So I'm going to write this out. MB is one of our market flow early adopters in 2016. And you can't do this on the wrong side of the small triggers. You're going to get your ass kicked 9 ways to Sunday. So listen to what I'm saying. White paint bar down into very strong up small triggers. Buy long after the white bar down. And again, what this is going to do for you is you're going to be going long right here. That's not a very good box. Here, let me change it to white. You see that? And then if you get a signal long, you can basically trail your stop up behind what a new bar would be. So as this starts to go back up, you're literally going to have a 2 or 3 tick stop. And if it runs, great. And if it doesn't, you lose a couple ticks and then you can get in close to your area. How's that for a little market flow magic? Go back and study it on your chart. Now, contextually, you have to have all the other things correct, right? You have to be looking for a long trade. You can't just do that willy-nilly out in the middle of anywhere. But if you did it, then you're long right here. Who did it? I know some of my old, more seasoned vets are going to have done it. Who went long after the white paint bar down? Give it to me. Who did it? I don't care if you guys missed it. I only want to know who took it. Because when you go back and look at it, you're like, damn, that's not so bad. Bobby, you did it? Go. Tony, you did it but didn't know it? All right. You just jumped in? All right. How you feel about it now? It looks pretty good, doesn't it? Do you guys just want me to call the market for you every day so you just sit back and trade and I'll tell you what's about to happen? No. You guys know all this stuff. You just have to practice it. You don't need me to do this. This is obvious stuff, guys. It's not rocket science. You pay me a commission too. All right. Anyway, look, this is a neat little trick that, you know, again, whenever you see it, you'll see it happen a lot, but you know, only when you're really looking. You know, let me go back. Can I illustrate something to you guys real quick? I just want to show you something. I'm going to go to the market flow section, which I know my brother does not like to go over with you kids, but I'm going to do it anyway. Look at what it says. Market flow signals that initiate entries are when your rules are true for a trend trade. Arrows generated by white bars follow an immediate reversal bar, an antenna bar, a yellow bar. So you have to have all of your trend trade rules true. Good bottom, strong triggers, everything going your way. That's the only time you look at the market flow. If your rules aren't true, you don't even have to look at it. It's just going to make you dizzy. But only in those certain instances where you're like, damn it, I need to, I'm in it. Look, even if you waited until after the signal and got in and said, hey, this is what I would call a, preferably you'd go long on the way down, right? Buy low, sell high. But it's this one instance where you see the super strong small triggers going up, you get a white paint bar down, and you might have to have a little bigger stop initially, but then once you get the signal, you can use the signal to literally have a couple ticks risk. And then for general trading, you can pretty much stay in as long as you stay above your small triggers. You don't even really make any type of deeper retracement until you get inside of the small triggers. But if you're above them, you can pretty much just chill and make a little more money. And then once you get inside of them, you'll make a deeper retracement, and then we'll probably get another trend trade. Anyway, I don't want you guys to go get too crazy on the market flow, but that's a really good situation. And again, look, right? So look, this is the other version of that. I just wanted to make sure I cover this so you guys don't go crazy. If you have a white paint bar down and you're below your small triggers, you would wait for a signal. Does that make sense? And then you would enter after the signal, not before. I mean, you could always get in before the signal, but then you're gambling a little bit when you're below the small triggers. Elvis, 63 or 57. I'm not watching enough to make a good guess. So lower. How's that? That's a guess because I'm not even looking at the chart. I just want you guys to see the difference on what I just told you, okay? If you're above your small triggers, you can be more assertive on the way down. If you're below your small triggers, you wait for a signal and then get in after the signal. Everybody say yes, I got it. I just want to make sure, because I don't want anybody going insane with these white paint bars trying to buy and sell every one of them. Only when the rules are true and you're waiting to do a trend trade. So look, for example, right now, let's just say hypothetically, you're waiting for a long trade. If you had a white paint bar down now, you would have to wait for a signal because we're below the small triggers. Just build one. Watch how easy this is. In the software guide, the rules and the instructions for building a chart just so happen to teach you how to build an 8-range market flow chart. So just follow those directions and you will be good to go. Let me know if you have any questions. Hell yeah, I do. I always know where my HVA lines are. Rain, you're talking about the HVA line that comes in down here at 50? Yeah, I mean, it could get down there. Look, a lot of people will say this. Can I give you guys more wisdom here? And this is in the market flow section in there, but I mean, obviously this is your trend trade area. Everybody agree? I mean, we got the right spot. So some people will opt in for, look, remember the 50-50 that we talked about where you had divergence? Some people will say if I have divergence on the 5-1 chart and I'm not quite sure whether I should get in at 57 or 58 or 63 or maybe even 50, they'll wait for a market flow signal over here instead of just getting in on the way down. So this is an alternative way of doing things. If there's divergence before your trend trade, wait for a market flow signal, which just so happens to be in the literature, but how's that? And again, watch. I'll do it with you if you guys want. I'm going to assume that because we're at a good spot. So, or you could even do it like this where you say, look, I'm going to wait for even an up bar on the market flow chart. So look, I know I want to go long, like Rain was saying, maybe it comes down here to 51. Who knows? So instead of just getting in, right away, I'm going to wait for some type of up bar with a market flow signal. And then you have to decide, is it still the trade you want to take when you're thinking about getting in on an up bar? You see that? So this is kind of an alternative way of doing it. And yes, we did make it down to the high volume area. So now look, do I still want to go long based on all of my other charts? That's the question. So because I had divergence and I'm waiting for a market flow signal, it gives me a second to say, do I still want to go long? Are my rules still true enough for me to, put money at risk? Does that make sense? So again, you have to ask yourself the question, if if you have this divergence and you're waiting for a signal or even an up bar, are the rules still true? Are my triggers still the way I want to see them? Do I have trouble that I'm trading into? It slows you down for a second so you can kind of make some decisions. Now watch, I'll leave it like this so we can see it. Now, it's a good bet that 50 is going to be a spot that's probably going to generate our long signal. I'm just going to take a wild guess and say that 50 is probably going to be a spot. So again, look, we were doing this alternative thing, right? So because we were below the small triggers on our 8 range chart and we had divergence, we said, hey, we don't know if it's 63, 57, or maybe 50, who knows? We'll wait for a signal. So now, oops, dang it. Again, another really good use of high volume lines here. That's not really a signal, but again, if I had a stop order in there buying above there, then you'd be in. But that's not really a market flow signal to go long. It's just an up bar, which is enough sometimes. You don't really need much more than that. But anyway. They'll usually come down a little bit. Anyway, that would be a good use of a market flow line if you were buying long at the market flow line, anticipating it's going up. Or like I had a stop order in above it, you'd be in. Or, just the secondary entry, which is wait for the small triggers to roll and then you get in the second chance. Either way. Yeah, or just wait for an up bar and then you'd be long at 57 without really having much risk in it anymore. You'll find that trend trades that overrun their entry areas a lot get to the high volume lines. It's a very, 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 very common thing. Look, I can go back to even, just to illustrate the point. Look, remember Learned Hand's little snafu over here that he got into? And it's like, he's like, I know those fuckers are going down, and this is a really good instance of sometimes they run a little farther and get to the high volume line and then start going anyway. It happens a lot on a lot of markets, and it's usually because there's something else going on that makes it go that high. Does that make sense? I mean, it happens all the time. And the more you watch the market flow, if there's something down here that caused it to go up farther, the high volume line, and then, getting in after a down bar, he would have got all the rest of that move. Yeah, I did. But I think it's an appropriate use because they F around a lot. All right. Now, even if you went long, we've got some management rules that are kicking in here a little bit, right? So look, do or die spot. Right? So if you got into your trade and you said, hey, if you were in your trade right now, you'd have to say to yourself, this is basically do or die. After a second divergence down, usually they go a little bit lower, but this is also the first time that your small triggers rolled up. So if you get an up bar here, it'll be, it'll go up the rest of the way. Contextually, I would say that after the small triggers roll and you get back above that fib, we'll probably end up going up, but we'll see. You see we're kind of running out of juice a little bit. Can I go back to, bear with me here. So look, I want to show you one from this morning. And this is the same kind of situation where I was short and ended up having to get out of my position because freaking divergence and the trigger lines and it ended up going anyway. And I just want you to see the time here. That was at like 7 o'clock this morning. You see that? So look, I want to go back to 7 and I want to show you. So this is where they were at 7 this morning. And I'm setting you up for what's going to happen next if it does, okay? So you're in short, and you say, you know what, I have to manage out of my position because of multiple divergences. And just like the one Learned Hand had, it's like, usually when you have that second or third divergence, they usually run up a little bit higher and get to something, and then they roll over. But in the education, we always say that you get your second chance if what? So, and again, crude oil may be no exception now. We'll go back and look at it. But if you're in and the market forces you out because of your rules, if the market rolls over and gives you a second chance, when the small triggers roll over, you can get in right there with a little teeny tiny stop. And then the market's going to end up finishing that move that you were looking for the first time. And this happens a lot. I'm trying to find a picture here for you guys. I don't know if I'm going to be able to find it or not. Anyway. It happens a lot. And again, look, this is where, again, I guess I lost a couple ticks, but no big deal. It's the same situation. You get in, you get a lower divergence. And look, don't get in again now until the triggers roll back up. And again, it's kind of like a safeguard against yourself, if you will. I think that was our last spot. It was worth 4 or 5 ticks. Because look, if that holds after the small triggers roll, you're going to look back later and go, man, that was the spot where from 59 all the way up to 805, basically you had 40 ticks worth of profit potential. It didn't go, but that's okay. But this is basically what you're looking for that second chance entry. If you missed it down here, this is the second chance, and you don't have to risk a whole lot, because if it gets through it, then it's going to be over really quickly, and you start to process over. I'm never afraid to lose 5 or 6 ticks. You know what I mean? I'm not risking 15 or 20 ticks on something like that, but if you risk 5 ticks, it's not going to hurt you. It's 5 ticks for 40. Is what it boils down to. You might have deleted it. Show me a picture where you think you ought to have it, and then we'll talk about it. Did you change it to not update on every bar? People change stuff and then they go, I don't wonder why it's not working. So guys, if there's no divergence potential, it's not going to plot. Just making sure. If you guys mess with the indicators, for example, T3 divergence potential, it has to be on price change, or else it won't update intra-bar. It'll wait till the end of the bar. So if you went in and changed it to calculate on bar close or something, that would probably make it not print. So if you messed with it, it might not work. Yeah, P, I'm going to call user error on it. Just reload your chart template. How's that? That usually solves it. Elvis, do you want to debate? I was saying that if right here at the 59 area, the triggers and the mid-band and all this area holds, that you could get in on that little pullback. Let's say you missed the first one, okay, is what I'm saying. I mean, it looks bad if it doesn't go, but what I was saying is if you missed the entry over here, Elvis, generally getting in on a pullback to the mid-band and the small triggers rolling over is a pretty good second chance that doesn't need more than about 5 or 6 ticks worth of risk, because if it closes below it, it's probably going to keep going down. So that's what I was saying is on any second chance type entry, you don't have to risk a lot of money. And if it if it breaks, then we'll go a lot lower, no big deal. But if the mid-band and small triggers rolls over holds, then we're going to go from 60 all the way up to resistance. So you don't know what's going to happen. You see what I'm saying right there? So if the mid-band and small triggers holds, which it could, but you don't have to risk more than about 5 ticks here to know whether it's going to hold. You just have to, and it didn't. And just like I said, if it doesn't hold, then it's going to go lower, and it did. So now, obviously, we're not going up. Anyway. All right, Elvis. I'm going to go back to the user guide real quick, okay? Have you guys spent much time in the... I haven't been in here in a long freaking time, so bear with me. Trade management techniques. Have you guys been through this section? It's been a while since I've been in here, but... So check out this picture, Elvis. And again, sometimes you get a divergence against you in a strong trending market that you opt out of getting out of the market, or you tend to ignore it. So, and this happens sometimes in a stronger market, where you say to yourself, I'm going to make it at least break the mid band before I get out. So you're not just jumping out because of a divergence for no reason. Does that make sense? So, again, it has to be kind of situational awareness to where you're saying this is the right situation to do that. But instead of just getting out with every old divergence, which, under normal circumstances, this rule is a really good rule. But a lot of times, you'll get a divergence in a strong trend, and then all of a sudden it goes whoosh, and just runs all the way up to your target, and you're like, mother scratcher, I got out. And it ran without me. So you're kind of weighing out, is it worth risking an extra 5 or 6 ticks to see if you can get the rest of that move or not? But I do have to say, it looks, after a second divergence, you can get out, and then that's the end of it. And then, you can get back in later. It's no big deal. Anyway, I can't say that I'm as highly focused on trading at the moment as I probably could be. That's the hard thing, I guess, about teaching and trading at the same time. You kind of lose a little bit of focus. All right. Do you guys see what I see? It's presenting us with another one of these 50-50 jobs. See that? Large triggers are above the area, small triggers are below. What's going to happen? Because you're asking yourself, should you take a trend trade short here? Right? Should you take a trend trade short or not? And again, remember the rule. We already came up with it, so let's see if we can implement the same rule. I wrote the rule for you guys. Where the heck did I put it? Huh. I just wrote it. Jeez Louise. All right, I'm scrolling up. Hang on. I literally just wrote the dang thing and put a picture in. I guess it's been longer than I anticipated. All right, so here we go. This is it. So look. Rule for a 50-50 entry. If we have a 50-50 look and divergence on the small chart, we're going to at least wait for a signal or a down bar on some other chart. Everybody cool with this? So look, this is a perfect example of 50-50. It might go down, it might not go down. I don't know what the hell it's going to do, but I know it's 50-50, and I know I have divergence. So this is where, for example, if you were using a market flow, you might say to yourself, I'll take a short if... Now, here's an interesting fact, tidbit. You see where we stopped? We stopped at that last high volume line. This happens a lot, actually. See how they came down to that second high volume line and stopped? Anyway, we're talking about doing a 50-50 short. Sorry, I digressed. So this would be the area where we're saying, okay, let's do a 50-50 short or not. There you go. Can you guys see all three charts? I swear to God, I think I'm going to sneeze. All right, so look. We said at least a down bar. Obviously, they had that post-haste. Not the easiest one to get into unless you're stopping yourself into a position. Now, the other thing about 50-50 trades is if you do get a second higher divergence. Are you guys saying that we should have divergence here plotting and it's not plotting? I would have anticipated we had a divergence there. All right. If it makes a divergence there, then my programmer put some shenanigans on me. So this is what you guys are saying. Sorry. All right. Well, we're not crashing, but that's not good. Hang on. I'm going to shoot this over to the programmer. Anyway, I can see just from the pattern that usually we'd have divergence potential work in there. So I'm on the case, guys. Sorry. I know there's going to be another update soon. At least it's not crashing. But I don't know what the hell happened to that. We'll figure that out. It's not crashing. That's a good thing. Not very much, anyway. Let me rephrase. We'll revisit this. I do have another update coming to you guys that solves all these other little problems. So if we go up here and it makes divergence, then I know you guys are right 100%. I know you. I don't doubt you. Sorry, I doubted you guys in the first place. You know, there's so many trillions of little things to look at and try to figure out that I'm glad I have you guys as eyes and ears for me. All right. So anyway, guys, let's talk about. Trust me. I need the feedback. Let's talk about one more thing. I added a couple things into the user guide. I want to make sure that we kind of cover these things. Number one, if you're a Forex trader, I didn't realize this, believe it or not, but I mean, after all these freaking years, of course, I don't trade Forex and I don't watch Forex, but I didn't realize that if you do Forex, you can get a free 90-day connection at forex.com, and you can run it into your NinjaTrader, which I put instructions on here just so you know. I bet you there's divergence now in there. Mother scratcher. Okay. Okay. Hang on. One more picture for my programmer. Okay. All right. So I sent all that to the programmer. Anyway, if you were short for whatever reason on a 50-50, a second divergence will kill it for sure and put it into it. Now we should probably go back up again. So we'll see what happens. The second thing that I added into the user guide, I just want you guys to see this, and I don't know if you have or you haven't or whatever, that's fine. I'm going to show it to you anyway. I added in a little section for prop firms in here. And anyway, I put some basic information. If you're new to trading or you're new to Nexgen, I put 4 different prop firms in here. These are the same ones that are on our resource page on the website. But specifically, there's 2 of them that we've done the most with, or the most that we've done with is Apex. And I just wanted to run this in here because 2 things. If you're brand new to trading, you're not as good of a day trader as you think you are. No matter how smart you are, how many millions of dollars you made in the real world, day trading is going to slow you down and humble you just a little bit. And it's going to take you longer than you think. From the time you say, I'm serious about trading and making money, to the time you actually make money, it's going to take a little longer than you think. And I don't say this to discourage anybody. What I'm saying is, all right, I want honesty, okay? Because I've blown out a lot of freaking accounts on these Apexes, especially trying to be aggressive and do too much. But tell me the truth. Has anybody blown out an account on Apex more than once? Say the truth, because I've done it. Everybody does. Not yet, but close. Okay. So look. Personally, I like the $250,000 account better because it has a bigger drawdown. Plus, it's cheaper overall. But let's just say, hypothetically, you do the 80% off and you're doing $250,000, okay? So the cost when you put in the thing is going to be, let's just say $125. Oops, I lost it. Bear with me. And I don't even think you should do the $250,000 one first, to be honest. I think that's probably too much because realistically, you're probably going to blow out your first one. So, here, I'll give you guys a link so you can be on the same page as me. But look, let's just say you start with a $50,000 account or even a $25,000, but probably $50,000 has the best drawdown to profit goals. You could do the 25,000, but you kind of have to trade a 1 lot because it's only $1,500 drawdown. So for $40 a month, you can trade this, and if you lose $2,500, then you end up, blowing out the account. You got to repay and start over. But I want you to think about it. Going on the assumption that you're going to blow out a couple of times. Let's say you're going to blow out 3 times before you get it on the 4th try. If you do it with real money, a couple of times, right? So let's say you do it with real money and you blow out. you're down 10,000 real dollars. I don't know about you guys, but when you're down 10,000 real dollars, your butt puckers up and it gets harder. The more money you're down, the harder it is to trade. And it is what it is. It's a psychological thing. The more pressure you're under, the harder it is to trade and just be loose and just do what the darn indicators tell you to do. And if you start blowing out 2,500, 5,000 at a time of your own money, it's going to be harder and harder until either you lose a lot of money or you end up quitting and you really mess up the best financial opportunity you probably ever had in your life, whether you know it or not now. And if you lose this one, you lose $40 for $36. Everybody can afford to lose $36. Not everybody can afford to lose $5,000 at a time. And anyway, it's really, 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 really important if you're a new trader to go through and do it in 3 phases. The first phase is simulator. And just simulate. You don't have to trade on real money. You don't have to trade on Apex. You just have to simulate and make sure that you're getting the rules right. Then when you say, hey, I got this, I'm pretty sure I could do it, I'm going to knock it dead, then it's time to go and do one of these Apex accounts. And just start with one. And look, you don't have to get 20 of them. Just get one and make it pay. And then with the money you making it pay, then you can buy more accounts. And what it's going to do, it's going to do a couple things for you. Number one, you don't have to buy a NinjaTrader license. You know, I think it's pretty damn criminal that they take all the brokerage from you and they make interest on your money and they charge you $99 a month to use the platform so you could trade through their brokerage. So, you know, you're already saving $1,200 a year if you just use Apex's license that they give you. They also give you the data feed. So you're saving money on the data feed and you're saving money on the Ninja license. And if you do it right, you got $50,000 to trade. So there's no downside whatsoever. There's only upside. And if you trade your own money, there's only downside risk. Now there's upside potential, but with upside potential comes downside risk. And this virtually eliminates the risk. And the money that you're saving on Ninja license and data feed pays for the damn evaluation. So no matter what, no, they don't let you transfer D. No matter what. Now, the only downside to Apex, there's 2 downsides to Apex, and I want to go through the downsides, okay? Are you guys with me? To be fair, Apex's drawdowns suck. You could be up $2,000 in a trade and you end up making $200. And instead of making $200, you've lost $1,800. That's the way they look at it. So, you know, that's the downside, is that they use a max equity high, open equity high drawdown, which sucks. But yeah, once you pass the drawdown, then it's not a big deal. The other downside, if you will, is that for the first couple of months, they only let you take out $2,000, even if you make $500,000 in profit. You know, $2,000 twice a month. So that's a downside. So now I wanted to go through, because I've been doing this one and starting this one, and I think this is a really cool secondary. The cost is a little bit higher. Now, you can get 40% off. So make sure that you use we got a little code 1618, our Fibonacci number. So make sure you use that code. Even if you go into their website and you mess around and come back, make sure you put that code in. And number one, we get lunch money and you guys save 40%. But they give you 40% off the price. The benefit of this one And now look, this is a big difference, guys. And those of you who've done Apex know this. They don't use open equity high drawdown. Whatever you actually make or actually lose is your drawdown. So if you're up $2,000 and you only make $1,000, you're actually up 1,000, not down 1,000 on your drawdown. The other nice thing is, yes, that's $2,000 per account. The other nice thing is, after you pass your evaluation, they let you withdraw your funds on day one. Now they have one small little stipulation that says if your max drawdown during your testing period was $2,000, you have to at least leave $2,000 in. But anything above your drawdown during your test, you can take out day one. So if you want to get paid a lot faster and all of your money, as much of your money as you want, this is a good option. So they're doing that now. Yeah, everybody's changing every week. They're all in a battle. All four of these guys are in a battle. Who can go cheaper? Who can pay out faster? But these guys pay out day one. So that's another way of doing it. No, they're not all new at all. Apex is older, Top Step. But anyway, look, the bottom line is, I didn't mean to get off on a long tangent on prop firms. If you're new to trading, use one of these prop firms. I don't give a rat's butt really which one you use. That's up to you. Read up on all of them. Do your own due diligence. Just use one of them. Get your Ninja license from them. Get your data feed from them. Have the chance to make money. No chance of losing a lot of money. They actually let you have 3 accounts with the Take Profit Trader, not 20 like Apex. But I still think Prudence says, my good friend Prudence, pass one, make some money, get paid, and then buy some more accounts. And here's the other cool thing. Are you ready for this? Right, Jose? You can trade Apex accounts and Take Profit Trader accounts and the other ones. You don't have to just do one prop firm, guys. You can have 3, 4, 5, 10 different prop firms going and use the trade copier. So it's not just pick one and that's the one you get. You can do all of them. So, there's no real shortage to the opportunities that present themselves. So first things first, number one, most important thing, make sure you're simulating and not trading real money first. Show me some pictures of your losers. Look, I love to see winners and that's nice, but show me your losers and I'll tell you what you did wrong or could have done better. And the more you hear it, the more it'll sink in and the more it's going to make sense to you. And then pass an account, get paid. And if you decide, hey, I want to trade 50 grand of my own money later, 6 months from now when you're making money, that's cool. But put all the risk on somebody else. Let us help you learn how to trade your software and read your software properly. Let somebody else take the risk of you learning to trade and actually becoming profitable. And then you can make some really good decisions later on what you want to do after that. Yeah. Well, the other cool thing, which I haven't seen it yet, but they're about to start it. They're about to actually start trading stocks and Forex and crypto on this Take Profit Trader. I love the trade copier. I have it going right now. So, right now you can trade futures, but pretty soon they're going to be able to do stocks, futures, and crypto on here, which that'll be interesting. Anyway, food for thought, guys. All right, I'm going to open it up, and I know it's 12 o'clock. I'll open it up for questions or anything that you guys would like to go through.